Oh, I'm live. Hi, everyone. Welcome to this week's episode of Global News Review, Global Money News Review, actually. My name is Ola, and I'm the founder of olaoladele.com. And basically, what we do at olaoladele.com is that we help people put their finances in order through access to information like financial education, and then also access to investment opportunities, and then finally what's it called, deals. Like, we actually share deals within the club. So if you haven't already, please check us out, and then we'll be sure to connect. Today's news this week has been quite interesting. The first news I want to highlight is sorry, I forgot to mention that if you are, I can see some people joining me, please just say hi. I would love to shout you out. So if you haven't before, if you're online and you can see me, please just holler, and so we can recognize you. So on the global space, right? Last week we talked about President Trump, the incoming president of the United States, and the tariffs that he has proposed to slam on China, just to preserve the economic security of America. But then this week, China came out with a response saying that they were going to stop exporting some specific metals to America. And these metals basically there's a tech war going on, right? And the idea is that if America is saying they're going to slam us tariffs, then the things that we are supplying America, we're going to stop supplying them. Now, there is actually a massive trade war going on between China and America. Now, from one perspective, it is better than for you to be a physical or nuclear war. However, from the fact that the economy is what affects everybody, right? We really need people to calm down. As said that they're going to stop exporting these metals, but America's response is like, whatever. There's not much of an impact because we have other sources. We have reserves, number one, and then we have other sources of these man can import from, right? Now, the interesting thing to note is why this is not just between China and America. What has been happening so far is that any of these policies out or these tariffs or whatever, they are encouraging some of their friendly countries to adopt. China is becoming too big, blah 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 blah. So you find countries like the Netherlands also adopting or speaking against it and stuff like that. Now, in a situation where, for example, China decides that, okay, even though America is into them, I'm also going to to those countries. Now, America might have the reserves, but do these other countries these things? No. And so there could be a spiral of events, right? And so for us as onlookers, it's very, very important for us to be aware of what's happening, because these things can literally trigger massive inflation, supply chain disruption. So you might find that some things would now become scarce, either scarce or more expensive, basically less available, of course. And when there's less supply, price, and there's still the same, will go up. So perspective, we need to actually look at how America and China are going to resolve, or maybe the word is to tone down on this war that they are fighting. Now, the interesting thing also is because, I mean, the response that China is giving is based on the things that President Biden, that's the current president of the United States, has done. However, the fun fact is that the incoming president Trump is saying that he's going to slam tariffs on BRICS nations. Now, if you've not heard about BRICS, there's a block of countries that are coming together. Brazil, Saudi Arabia, China is one of them, and then one of the things they're trying to move away from the dollar, right? And so we are saying here, so President Trump is saying that any country that is affiliated with this BRICS agenda and that wants to move away from the dollar, he's going to slam tariffs on them. So think of the fact that China already has some tariffs on their head. I think of what could come on the back of, if he's able to, right? So, and then also think of the fact that there are some smaller nations. There's South Africa that's part of that block. So there's a lot happening on the trade perspective, on the trade side of things. So we need to watch out for it, especially if you're investing in businesses that does international trade across these countries, right? Because some political political impact of this drama. So that's that for the global news. So it's more about the watch out that you can do from this side to but it's almost like you need to say if they go ahead with this, how will this impact this? What businesses am I in that have this and have exposed? And what would happen if these things crystallize? So you don't just get caught unaware. So you can insure yourself, so you can diversify. There are different things that you can do, but at least be aware that this might be coming. Now that's that for global news. This week we're going to be talking. They're working with IMF slash World Bank to what's it called, to issue a diaspora bond. Now, pull back a little bit. Nigeria did something like this earlier in the year, where they issued a diaspora bond. And what's a diaspora? Only for Kenyan residents, only for locals, residents, and wherever you are in the world, as long as you're a national of that country, you can access the bond. And then if you are a resident in that, if you are a resident in that country, you can access that bond. So it's the difference between this and a regular euro bonds. A euro bond is listed in another country. So for example, a euro bond, it could be issued in Ireland, and so anybody, global investors can, right? But for a diaspora bond, it's listed in their country, it's issued in their country. For you to access it, you must have like maybe a bank account within the country and stuff like that. Now, why is Kenya exploring this? One, they need liquidity. What we have seen is that whilst they try, but there was a massive pushback, led to civil unrest, and they had to slow down on that. They are picking up that if you want to grow and you want to grow quickly, debt is a very good tool. Now they are saying that they're going to raise about 500 billion Kenyan shillings, which is about $3.6 billion. If they're able to do that successfully, to that's one. No, to know. Okay, I'm back. The capital that will be raised will be used to develop infrastructure, I think upgrade their airports, stuff like that. Now, if they're able to do this successfully, like I say, if, because the amount I think is quite significant compared to what Nigeria was able to raise. That's one. And then also compared to the amount, the size that they've been able to raise successfully in the international markets. And then if you now consider the fact that diaspora bond is only for Kenyan nationals and Kenyan locals, Kenyan residents, right? If you consider that, then you know that 3.6 billion in one shot might be a lot. So I suspect that they would actually break it into tranches. That is probably what's going to happen. I suspect that that's what's going to happen. But if they think they can go for the 3.6 billion at once, I wish them success. It would be good to see. It will actually be a massive vote of confidence for them to be able to pull Okay, I'm back. Sorry about that. Now, infrastructure issues is a real problem today, but internet is quite choppy. Apologies for that. And I was finally saying, if they're able to pull it through, it will be a massive vote of confidence. I dare say that after success in the diaspora bond issue market, I think a lot of countries that are well positioned and have a good community on it, because it does make a lot of sense. It's almost tapping. It's literally Africa funding Africa, and I'm totally here for it. So now, final news. Hi, I see some people. Please say hi. Please say hi. Please say hi. I see some people listening. Sorry for the technical issues today. And then the final news I'll be focusing on will be Nigeria. Nigeria issued Eurobonds this week, right? We're able to raise $2.2 billion from the Eurobonds market. Now, the interesting thing about it, first of all, was that it was oversubscribed by 4 times. What does that mean? As much as Nigerians are complaining about the country and are so uncomfortable, offshore investors said they wanted 9 billion offshore investors brought in $9 billion to say, I'm willing to buy your bond. I'm willing to invest in your bond in this country for 10 years, right? And that is a massive vote of confidence that is such a good sign for the country. Such a good sign. Despite all that is happening, it is actually such a good sign. Now, the second thing to also highlight about it was the rate. Now, the rate it came out at 9 point something percent, a little over 9% for the 6-year bond, and then a little over 10% for the 10-year bond. Now, what does this mean? For context, first thing, for the offshore investors, it is a steal. Oh, I see someone saying hi. It is a steal. Hi, for offshore investors. Hi, Shell. For offshore investors, it's a steal. Why is it a steal? It's a steal because US Treasuries 10-year, 7-year, 5-year around 4% level. So if you're able to get 9-10%, that's a 500 basis points, 5% um, profit or increase over the US Treasury. So that is a fantastic premium. That's one. And then it's also a steal because Nigerian Treasuries, Nigerian Eurobonds, the 2049, which is about 25 years to maturity, is actually trading at 10.5. So if you get offered a 10-year bond at 10.3, that is a massive steal, right? So somebody else is investing the 25-year bond, right, at 10.5, and then somebody else is investing in the 10-year bond at 10.3. Can you see why people will rush it? So it's really, really a good one. It's actually a steal. Now, on the Nigerian side, it is still borrowing. The impact of borrowing is that the future generations are going to have to pay for it. So when you hear things about the budget that they're going to spend 30% of the budget on debt servicing, is because we are borrowing at very high rates. And we are still borrowing at very high rates. Now, you might now ask, if you are observing the Nigerian system, you would know that the currency has appreciated. It's not much in the news because everybody's being careful, but literally we know we hit 17 but right now we are seeing 16 15 1550. Now, what actually happened or what is happening after the Eurobonds offer and the sale, and the fact that the results came out 4 times demand, right? Before times the offer demanded, right? We found offshore investors coming in. So they came into the treasury bills market. Now, the Nigerian treasury bills market, for you to buy Nigerian treasury bills, you must have Naira. So if you're an offshore investor, you have to sell your dollars to get Naira before you can buy. So what we found is that in this week, and then CBN also created a system, open up their system this week for people to trade FX, right? There was about a 1 billion flow into the economy, Nigerian economy, USD this week. And so you just saw that there was more supply than demand this week. And then, of course, people that have been hoarding brought out some of their money, right? Now, is this significant? Is this sustainable? Because that's the next question. It actually can be sustainable. Let me tell you why. The major reason why Nigeria is where it is when it comes to the exchange rate is not necessarily because of demand and supply as much as it is about a loss of confidence. So people are like, I saw dollar at 400. I didn't buy because I was being a Nigerian. And then I saw it at 600 and I was looking. And then it got to 1,000 and I was looking. And I was thinking, it's going to correct. And then it got to 1.5 and I'm like, I can't wait anymore. I am not going to be leaving my money in Naira anymore. I'm going to be converting to dollars. Now, when you see a lot of people going in that direction, it becomes a self-fulfilling prophecy because makes it just so someone that exports that ordinarily come in and supply the market with their USD would say, let me keep this thing in USD. I don't need Naira. So that vote of confidence is more of a reason why we are where we are than actual demand and supply. Such that when anything can bring back that level of confidence to say that, okay, there are people that are bringing in money into this country that are not Nigerians, meaning that you don't have to, you carried your leg and you brought it to this country. It just makes people feel like, maybe there's something that I'm not seeing that they are seeing, right? Or maybe this country is not as bad as it sounds or it looks or is being portrayed to be. Right now, and so what happens is that after a while, if we can see that there's a steady flow of offshore investors over a 1 month, 2 months, 3 months period, what you would see is that people would gradually start bringing out the money that they have been hiding under their pillows. They've transferred offshore, and all that, or they export, they leave it in the country that they exported to. They don't bring it back to Nigeria. You will find over time that if it was at 1.7, I could have sold at 1.7. Now it's at 1.5, and it's looking like it's going to get to 1.3. What would I do? I'll bring my money, and then after a while, everybody moves away from hoarding USD. And then they now say, oh, treasury bills is not so bad. What are the options I can do in dollars? It's so low. Do you understand? And those things, and you begin to come back to the currency. So if we're able to sustain it, I dare say that if we're able to keep the confidence and there's no shock, because sometimes we know how to shock ourselves on necessary policies and stuff, right? If there's none of that and the central bank and Ministry of Finance are aligned on this, I think it's sustainable, because this Eurobond offer is actually a good one. We are supposed to loud it very well. It's actually good news for the country. So hopefully, fingers crossed, we're able to sustain it. If you have any questions, if you have any thoughts around this, if you are still on the skeptical side, it's understandable. Because I mean, as an investor, especially when you're investing in money you've worked hard for, it's also important to be cautious. It's also important to diversify. So yeah, thank you so much for listening in. Don't forget that these sessions are sponsored by the Money with Club. And you can check us out at, let me see if I can put it up, www.themoneywithclub.com, and find out more about us. And also we have a Substack newsletter, right? So you can subscribe to our Substack newsletter, follow us on all the social media platforms, and you can know more about us and how you can learn about putting your finance in order, from personal finance to investing to the economy. We have it all covered.